In the complex theater of international economics, pronouncements from major political figures can often reshape perceptions and invite intense scrutiny. Recently, former U.S. President Donald Trump made a rather striking declaration. He suggested Malaysia is well on its path to becoming the next global economic powerhouse, essentially following in the enormous footsteps of China. This assertion, coming from a figure known for his disruptive views on trade and geopolitics, has certainly turned heads. It warrants a deeper examination, especially given the intricate dance of global manufacturing and supply chains currently underway. Is this hyperbole, a shrewd observation, or perhaps a bit of both? The implications are significant. The timing of such a statement is particularly noteworthy. Global economies are still recalibrating from recent disruptions, and the search for resilient, diversified supply chains is a paramount concern for corporations and governments alike. Mr. Trump's own past policies during his first term, characterized by trade disputes, particularly with China, inadvertently spurred some of this diversification. His spotlight on Malaysia now, even as he has also floated the idea of new tariffs on Malaysian goods, adds another layer of complexity to the U.S. approach to Southeast Asia. This dual posture of potential praise and punitive tariffs creates an ambiguous landscape for nations like Malaysia. Many observers might initially react with skepticism to the comparison with China. After all, China's economic transformation over the past few decades has been on an unprecedented scale, fundamentally altering the global balance of power. Malaysia, while a significant player in Southeast Asia with a commendable growth story, operates on a different demographic and geographical magnitude. However, to dismiss the claim outright would be to ignore the very real and substantial economic shifts occurring within Malaysia and the broader region. The core of the assertion lies in the trajectory and the strategic positioning Malaysia is cultivating. Therefore, this essay will delve into the factors underpinning Mr. Trump's bold claim. We will explore Malaysia's recent economic performance, its burgeoning manufacturing sector, and its strategic advantages. We will also draw comparisons to China's own development path, while acknowledging the crucial differences. Furthermore, we will analyze the challenges Malaysia must navigate, political, environmental, and geopolitical, if it is to realize such ambitious economic aspirations. Understanding this potential shift is crucial for anyone trying to comprehend the evolving global economic map in 2025 and beyond. Malaysia's economy has indeed been demonstrating impressive vitality in the recent past, lending some credence to the optimistic assessments. Official figures indicate a robust gross domestic product growth, reaching between 7 and 8% in recent quarters. This level of expansion is significant, particularly in a global climate that has seen many larger economies struggle to regain momentum post-pandemic. Such growth is not merely a statistical blip, it reflects underlying dynamism and structural shifts that are propelling the nation forward. This consistent upward trend suggests a resilient economic engine firing on multiple cylinders, demanding closer attention from international analysts and investors. A primary driver of this economic vigor is the remarkable expansion of Malaysia's manufacturing sector. Since 2020, this sector has grown by nearly 40%, a substantial increase that underscores the country's industrial capabilities. This isn't just about producing more goods, it's about producing more sophisticated goods. The emphasis has increasingly been on high-value products, particularly in the critical global industries of semiconductors and electronics. This strategic focus allows Malaysia to capture a more lucrative segment of the global value chain, moving beyond lower-skilled assembly operations that characterized earlier phases of development in some emerging economies. The impact of this manufacturing prowess is clearly visible in Malaysia's trade statistics. The nation's total exports have reportedly doubled in just 3 years, a startling pace of growth that highlights its increasing competitiveness on the world stage. Critically, high-value products are forming an ever larger share of this export boom. This qualitative shift is as important as the quantitative one, indicating a maturing industrial base capable of meeting the exacting standards of global markets for technologically advanced goods. This export performance is a testament to the strategic investments made in upgrading industrial capacity and fostering innovation within key sectors. This surge is not accidental. It is the result of concerted efforts and favorable global conditions. The Malaysian government has actively courted investment and supported key industries, while global companies have increasingly looked to diversify their manufacturing bases. The confluence of these factors has created a fertile environment for growth. While the comparison to China's overall economic might remains a very high bar, the current trajectory of Malaysia's key economic indicators certainly points towards a nation making significant strides, rapidly enhancing its economic profile and its importance within the global manufacturing ecosystem. When Donald Trump likens Malaysia's potential to China's economic miracle, it inevitably invites a comparative analysis. There are indeed some discernible parallels between Malaysia's current development trajectory and China's explosive growth period, particularly during the late 1990s and early 2000s. One of the most striking similarities is the strong emphasis on export-oriented manufacturing as a primary engine of economic expansion. Just as China leveraged its labor advantages and growing industrial capacity to become the world's factory, Malaysia is now strategically enhancing its manufacturing sector, particularly in high-tech areas, to serve global demand and climb the economic ladder. Foreign direct investment has played a pivotal role in both narratives. China's opening up to foreign investment was a critical catalyst for its modernization, bringing in capital, technology, and expertise. Similarly, Malaysia has seen a significant surge in FDI, especially into its technology sector, which reportedly increased by an astounding 215% between 2021 and 2024. This influx of foreign capital is not just funding expansion but is also integrating Malaysia more deeply into global supply chains for advanced products. The establishment and expansion of operations by over 30 major technology companies, including giants like Intel, AMD, and TSMC, mirror the way international firms once flocked to China. Furthermore, state-guided initiatives feature in both countries' development strategies, albeit with different characteristics. China's model of state-directed capitalism, with powerful state-owned enterprises and five-year plans, is well documented. Malaysia too has strategic investment vehicles like its sovereign wealth fund, Khazanah Nasional. This fund is actively investing in key technologies and industries, aiming to steer development in strategic directions. However, it is generally perceived to operate with greater transparency and within a different governance framework than its Chinese counterparts, reflecting Malaysia's distinct political and economic system. This nuanced approach aims for strategic direction without replicating the totality of China's state control. Despite these parallels, crucial differences must be acknowledged to maintain a balanced perspective. The sheer scale of China's population and domestic market provided a unique platform for its growth, something Malaysia cannot replicate. Moreover, China's political system and its ability to mobilize resources centrally are distinct. The global geopolitical context is also vastly different today than it was during China's primary ascent. A more multipolar world and heightened trade tensions present both opportunities and challenges for emerging players like Malaysia. Thus, while echoes of China's boom can be heard, Malaysia is charting its own unique path. One of Malaysia's most undeniable and enduring advantages is its strategic geographical location. The nation sits astride the Strait of Malacca, one of the most critical maritime choke points in the world. Nearly 25% of all global trade passes through this narrow waterway annually, connecting the Indian Ocean to the Pacific Ocean and linking major Asian economies with the Middle East, Africa, and Europe. This Malacca dividend provides Malaysia with an inherent edge in international commerce, logistics, and maritime industries. It is a geographical gift that, when properly leveraged, translates into significant economic benefits and strategic importance. Recognizing this, Malaysia has invested substantially in developing world-class port infrastructure and extensive manufacturing and export facilities along its coastlines. These investments are not merely about having ports, they are about creating efficient, high-capacity hubs that can handle the immense volume of trade flowing through the region. The country's commitment to upgrading its logistical capabilities has been a key factor in attracting businesses that rely on seamless supply chains. This foresight has positioned Malaysia as a crucial node in the intricate network of global trade routes, ensuring its relevance in international commerce. The resilience of Malaysia's maritime infrastructure was notably demonstrated during the recent global supply chain crises. While ports worldwide faced crippling congestion and operational breakdowns, Malaysian ports reportedly maintained an impressive 85% operational capacity. This reliability did not go unnoticed by the global shipping industry. In a testament to their efficiency and strategic importance, three of the world's largest shipping carriers significantly increased their port calls in Malaysia by over 30% in the past year alone. Such a shift underscores the growing confidence in Malaysia's ability to manage complex logistical challenges effectively. This strategic positioning, coupled with robust infrastructure, is a cornerstone of Malaysia's economic aspirations. It facilitates the efficient import of raw materials and components for its burgeoning manufacturing sector, and the swift export of finished goods to global markets. The Strait of Malacca is more than just a waterway for Malaysia. It is a vital economic artery. As global trade patterns continue to evolve, and as companies seek more resilient and diversified logistics solutions, Malaysia's control over and development of this critical passage will only enhance its geostrategic and geoeconomic standing on the world stage. Section 5. Powering the future high-tech manufacturing and foreign investment influx. The heart of Malaysia's burgeoning economic narrative lies in its rapidly advancing high-tech manufacturing sector, particularly in semiconductors and electronics. This is not a new area for Malaysia, which has long been a player in electronics assembly. However, the recent shift is towards more sophisticated, higher-value activities, including design, research, and advanced manufacturing processes. This strategic move up the value chain is critical for sustainable economic growth and is attracting significant international attention and, crucially, investment. The focus is clearly on becoming an indispensable part of the global technology ecosystem. The influx of foreign direct investment, or FDI, into Malaysia's tech sector has been nothing short of remarkable. Between 2021 and 2024, FDI in this area surged by an impressive 215%. This flood of capital is a clear vote of confidence from the global business community. During this period, more than 30 major international technology companies, including industry leaders such as Intel, AMD, and TSMC, have either established new operations or significantly expanded their existing facilities in Malaysia. These are not fleeting investments. They represent long-term commitments to building substantial technological capabilities within the country. This concentration of global tech giants is transforming Malaysia into a key hub for the semiconductor industry, a sector that is foundational to almost all modern technologies. As global demand for chips continues to outstrip supply, and as geopolitical considerations push for diversification of chip manufacturing, Malaysia is well positioned to benefit. The country is actively marketing itself as a China alternative, or China plus one location for Western companies looking to de-risk their supply chains without sacrificing quality or efficiency. This strategy appears to be yielding significant dividends, attracting firms wary of over-reliance on a single manufacturing geography. The Malaysian government's proactive stance, offering incentives, developing specialized economic zones, and investing in skilled labor, has been instrumental in attracting this wave of high-tech investment. The ambition is clear, to move beyond being a mere assembly hub to becoming a center for innovation and advanced manufacturing. This focus on high-value electronics and semiconductors is not just about economic growth. It's about securing a strategic position in the industries that will define the future, thereby ensuring Malaysia's relevance and prosperity in the decades to come. Section 6. Vision 2030. Charting a course for a developed nation and beyond. Malaysia's ambitious economic goals are not just aspirational, they are underpinned by a comprehensive national strategy known as Vision 2030. This initiative serves as a roadmap for the country's next phase of development, aiming to transform Malaysia into a high-income, technologically advanced, and sustainable nation by the end of the decade. It builds upon previous long-term plans, but places a stronger emphasis on inclusive growth, environmental sustainability, and enhancing global competitiveness. Vision 2030 is the framework guiding the significant investments and policy decisions currently shaping the Malaysian economic landscape, providing a clear direction for public and private sector efforts. A cornerstone of Vision 2030 is massive infrastructure development, designed to enhance connectivity and create enabling environments for business. The government has committed over $60 billion to various infrastructure projects. These projects are not just about roads and bridges. They include the development of sophisticated special economic zones like the Iskandar Development Region, the East Coast Economic Region, and the Sabah Development Corridor. These zones are designed to attract specific industries, foster innovation clusters, and stimulate regional development, effectively connecting the various economic engines of the country into a more cohesive and powerful whole. Beyond physical infrastructure, Vision 2030 also targets specific industry growth, aiming to diversify the economy and move into future-oriented sectors. While building on existing strengths in electronics and manufacturing, the plan also prioritizes areas such as renewable energy technology, biotechnology, and advanced materials. For instance, the national oil company Petronas, a significant contributor to the Malaysian economy, is not only expanding its traditional operations internationally, but is also making substantial investments in solar power, hydrogen, and other alternative energy sources, aligning with global sustainability trends and future energy demands. The ultimate goal of Vision 2030 is to elevate Malaysia to the status of a fully developed nation, characterized by high living standards, a resilient economy, and a society that is both equitable and environmentally conscious. This requires a multifaceted approach, encompassing economic restructuring, social development, and good governance. The plan acknowledges the challenges ahead, but sets forth a clear and ambitious path. The successful implementation of Vision 2030 will be critical if Malaysia is to truly capitalize on its current momentum and realize the kind of economic transformation hinted at by observers like Mr. Trump. Section 7. Navigating Headwinds: Political, Environmental, and Geopolitical Realities. Despite the optimism surrounding Malaysia's economic prospects, the nation must navigate a series of complex challenges that could impede its progress. Politically, Malaysia has experienced a period of relative instability since 2018, with several changes in government. While economic policy has, to a commendable degree, shown consistency across these administrations, continued political fluidity can create uncertainty for long-term investors and potentially slow down decision-making processes for critical reforms or large-scale projects. Ensuring a stable and predictable political environment will be crucial for maintaining investor confidence in the sustained implementation of its ambitious development agenda. Environmentally, rapid industrialization and development inevitably bring pressures. Malaysia, a country rich in biodiversity, already faces significant environmental concerns, including deforestation, particularly for palm oil cultivation, and the ecological impact of expanding industrial activities. As manufacturing and urban areas grow, managing waste, water resources, and air quality becomes increasingly vital. The goals of Vision 2030, which include sustainability, will require robust environmental regulations, diligent enforcement, and a genuine commitment to green growth. Balancing economic expansion with environmental protection is a delicate act that Malaysia must master. Geopolitically, Malaysia walks a tightrope, particularly in managing its relationship with China. China is Malaysia's largest trading partner and a significant investor, notably through its Belt and Road Initiative, which has funded infrastructure projects like ports and railways in Malaysia. This economic interdependence is beneficial but also brings complexities. Malaysia aims to maintain a neutral political stance, positioning itself as a bridge between the US and China, as articulated by its Trade Minister, Tengku Zafrul Aziz. However, navigating the strategic rivalry between these two superpowers while safeguarding its own national interests requires astute diplomacy and careful balancing. Adding to these external pressures, the very figure who highlighted Malaysia's potential, Donald Trump, has also proposed potential new tariffs of 24% on Malaysian goods. This underscores the unpredictable nature of international trade policies and the vulnerability of export-oriented economies to such measures. For Malaysia, this means that even as it attracts investment due to US-China tensions, it could also become a target in broader trade disputes. Successfully managing these multifaceted political, environmental, and geopolitical headwinds will be as important as its economic strategies in determining whether Malaysia can indeed become the next major economic success story. Section 8. Building a digital and knowledge-based economy for tomorrow. A critical component of Malaysia's strategy to ascend the global economic ladder is its dedicated push towards creating an advanced digital and knowledge-based economy. The Digital Malaysia Initiative is a comprehensive plan aimed at transforming the nation into Southeast Asia's most sophisticated digital hub. This initiative encompasses a wide array of ambitious targets, including achieving nationwide 5G coverage to ensure high-speed connectivity for all citizens and businesses. It also involves the development of robust digital identity systems and the streamlining of e-government services to enhance efficiency and accessibility for the populace. Such foundational digital infrastructure is seen as non-negotiable for future competitiveness. Beyond basic connectivity and services, Malaysia is also fostering an environment conducive to innovation in cutting-edge digital industries. The government is championing progressive regulatory frameworks for emerging sectors like financial technology and even cryptocurrency, seeking to attract talent and investment in these rapidly evolving fields. By creating a supportive and clear regulatory landscape, Malaysia aims to position itself as a forward-thinking player, encouraging experimentation and the development of new digital products and services that can serve both domestic needs and international markets. This proactive approach is designed to capture the next wave of digital economic growth. Recognizing that human capital is the bedrock of any knowledge-based economy, Malaysia is making significant investments in education, particularly in science, technology, engineering, and mathematics. The government has increased funding for STEM education, incorporating an international curriculum to ensure global standards. Furthermore, it is actively fostering partnerships between local universities and world-renowned institutions such as MIT and Stanford. These collaborations aim to elevate the quality of higher education, promote research and development, and produce a skilled workforce capable of driving innovation in high-tech industries, ensuring a pipeline of talent for its expanding sectors. To further support its burgeoning tech boom and attract global expertise, the Malaysian government has implemented special visa programs designed to draw skilled tech workers from around the world. These programs aim to make it easier for international talent to live and work in Malaysia, contributing their skills and experience to the local ecosystem, while also facilitating knowledge transfer. By combining investments in digital infrastructure, a supportive regulatory environment, a strong focus on STEM education, and an open approach to global talent, Malaysia is diligently laying the groundwork for a future where its economy is driven by innovation and knowledge. Section 9. The Malaysian Moment: Implications for Global Supply Chains and Western Interests. The rise of Malaysia as a significant manufacturing and tech hub carries profound implications for global supply chains, which have been under intense pressure to diversify and become more resilient. For years, many Western companies were heavily reliant on China for their manufacturing needs. However, geopolitical tensions, rising costs, and the desire to mitigate risks have prompted a strategic shift. Over 140 international companies have reportedly relocated significant operations from China to Malaysia since 2022, drawn by its specialized economic zones, skilled workforce, and a business environment designed to ease this complex transition. This trend signifies a tangible reshaping of global production networks. Malaysia is astutely positioning itself not as an adversary to any major power, but as a neutral and reliable partner, a China alternative that can also serve as a bridge. Trade Minister Tengku Zafrul Aziz has explicitly highlighted Malaysia's potential role in connecting U.S. and Chinese economic interests, leveraging its strategic location and diplomatic posture. For Western companies, Malaysia offers a compelling value proposition: a politically stable, relative to regional alternatives despite recent shuffles, an economically vibrant base in the heart of Southeast Asia, with strong infrastructure and a government eager to attract high-value investment. This can lead to more robust and geographically diverse supply chains for critical goods. However, this Malaysian moment also presents a new set of considerations for Western companies and policymakers. While diversification is welcome, a deep understanding of Malaysia's domestic landscape, including its political dynamics, labor laws, and environmental regulations, is essential. Engaging with Malaysia requires a nuanced approach, recognizing both the opportunities and the potential challenges. Furthermore, the scale of Malaysia, while growing, cannot single-handedly replace China's vast manufacturing capacity. Instead, it represents an important part of a broader plus-one strategy for many international firms, contributing to a more distributed and hopefully more stable global economic system. Ultimately, Malaysia's ascent, if sustained, could offer a template for other mid-sized nations looking to carve out a niche in the global economy by focusing on strategic sectors, investing in human capital, and leveraging their unique geographical advantages. For the West, a more economically powerful and technologically advanced Malaysia could be a valuable partner in a dynamic Indo-Pacific region. The key will be fostering a relationship based on mutual benefit, supporting Malaysia's development goals while also ensuring that its growth aligns with broader international norms regarding trade, labor, and environmental sustainability. The story of Malaysia's economic journey is still unfolding, but its current trajectory is undeniably one to watch closely.